Hewlett Packard announced that tariffs were really going to hold them back in 2025 in their earnings announcement that was released yesterday. And the stock is selling off, to say the least. It's down more than 9% today. This company gets most of their PCs, printers, and items that they sell internationally manufactured in China. And the PCs that are sold here in the US would likely get hit with that 10% additional tariff that the current administration is looking to impose on China. So that was a big impact to HP that could really squeeze their margins in the near term, increase prices, and potentially affect overall units sold of PCs and printers for Hewlett Packard. The stock is selling off. Do I think it's a good opportunity to buy, or is it a sell? Well, let me do some analysis, look at their fundamentals, and then answer that question. So overall, HP is a legendary company. Its stock has gone up over time, but it's only a $31 billion market cap company. Its revenues are way up there, $53 billion. Forward P looks nice and low. Nice dividend, but they may need to reduce that if their profitability really suffers. This is a Dow company. It's a nice income stock. Analysts think it's a hold with a discount of 10%. Over the 5 year, it's done okay, 32%. Over the 1 year, it is only up 4% thanks to that big haircut that it's receiving today. The company did announce decent growth. It's growing 2.42%. It actually exceeded the expectations that Wall Street had on the stock. PC sales have been pretty good, but the news of the tariffs is what really put a wet blanket over the earnings announcement. And it really makes the future, the next couple of years, look pretty cloudy for this company. So that's what really, really spoiled everything. The company is a mature company generating good free cash flows. Over time, it has increased cash flows, and its margins are not very good. This is a hardware company. So overall, this is it was a safe stock, and I thought pretty good to have for income. But right now, boy, that is really up for debate. As we look at the forecast, a number of analysts cover this stock, and it's expected they're going to continue to slow grow in the current year that we're in that ends in October. They're going to grow at 3.5, and then they're going to grow 3% the following year. So it's a slow grower. Earnings per share will grow also modestly. It's not getting much of a PE because it's not growing. It's not very profitable either. So those are the factors there. Now let me jump into a valuation of Hewlett Packard. My valuation of Hewlett Packard really changed to the negative. A couple of reasons why. Right now, I have the stock actually fairly priced. Imagine that after this big decrement in the price. Their cash flows are good, but I'm actually saying that they're going to go down over 10% over the next 4 years. And that's going to reduce the amount of cash. They had a very good free cash flow year, but I think that cash flow is going to go down as they're paying that tariff and they're having to reduce their cash flows. And then over the long haul, they will get back to growing that cash over time. I've increased the discount rate just because there's a lot of risk. What's going to happen with the tariffs? Will the supply chain be at risk? Will the consumer in the US be able to afford the PCs at a higher price? Would they just keep their PCs for longer? Those are all really important questions to answer, and it really makes the stock riskier. So the cash on the balance sheet's $3 billion. They have $9.6 billion of debt. So overall, it's just slightly over in value compared to its current market cap. So it's just a 2% discount based on free cash flows. Earnings per share drive about a 4% premium on the stock. So overall, it is fairly priced. Now, Hewlett Packard was in my portfolio as a nice stable stock, and for certain periods of time, it actually performed quite well, but it obviously is not getting it done this year. And I had already been shedding shares over time to create cash. The current valuation, the outlook on the business lead me to sell Hewlett Packard HPQ. I will be selling all my shares. I'm going to accelerate my dollar cost average selling of Hewlett Packard and get this one off my portfolio. I hope that their business does recover. I am a fan of the company. They've been around for a long time, but the reality is that I could still be a fan. I don't have to be a stockholder. I can go invest that capital in a company that's going to really thrive for the next couple of years. So that's my video on Hewlett Packard. I hope you found it interesting. Would love to hear your thoughts on what you think about the company. Thank you for watching. Good luck.